Welcome to Public Wire. The OTC market continues to grow with the announcement of these great brands. Dixie Brands Inc. OTCQX DXBRF, a consumer packaged goods company in the cannabis industry, has qualified to trade on the OTCQX Best Market. Dixie Brands upgraded to OTCQX from the Pink Market. AYR Strategies Inc. OTCQX CBAQF, a vertically integrated cannabis multi-state operator with a portfolio of companies in Western and Eastern U.S., has qualified to trade on the OTCQX Best Market. Pacific Financial Corp. OTCQX PFLC, the bank holding company for the Bank of the Pacific, has qualified to trade on the OTCQX Best Market. Pacific Financial Corporation upgraded to OTCQX from the OTCQB Venture Market. Abacus Health Products Inc. OTCQX ABAHF, a company that engaged in the development and commercialization of over-the-counter topical medications with active pharmaceutical ingredients and which contain organic and natural ingredients, including a cannabinoid-rich hemp extract containing CBD, has qualified to trade on the OTCQX Best Market. MLI Marble Lending Inc. OTCQB MRBLF. Marble Financial provides Canadians with a second chance to rebuild their credit and fast-track their way back to mainstream lending with socially responsible lending through our proprietary fintech solutions. The company's flagship product has funded loans in excess of $10 million and helped over 1,100 Canadians rebuild their credit since 2016. Their proven consumer credit rebuilding strategy works in less than half the time as compared to the current traditional method through a consumer proposal. Corsa Coal Corp. OTCQX CRSXF, a coal mining company focused on the production and sales of metallurgical coal, has qualified to trade on the OTCQX Best Market. Columbia Care Inc. OTCQX COLXF, one of the largest fully integrated operators in the global medical cannabis industry with licenses in 15 jurisdictions across the U.S. and the EU, has qualified to trade on the OTCQX Best Market. Vapin MJ Ventures Corporation, OTCQX VAPNF, a fully integrated agricultural technology services and property management company in the cannabis industry, has qualified to trade on the OTCQX Best Market. As reported by Reuters, Richard Branson's space tourism venture, Virgin Galactic, plans to go public as part of a deal with a special purpose acquisition company created by Social Capital LP. The deal was earlier reported by the Wall Street Journal, which said the SPAC will invest about $800 million for a 49% stake in Virgin Galactic. The deal could be announced as early as Tuesday morning, said the source, who declined to be named because the matter is confidential. Branson's company is racing against Blue Origin, the space business of Amazon.com Inc. founder Jeff Bezos, to bring tourists into space. Virgin Galactic in February soared to the edge of space with a test passenger for the first time, nudging the company closer to its goal of a suborbital flights for space tourists. After Branson founded the company in 2004, his ambitious timeline for taking customers into space suffered delays and a fatal setback when the original Spaceship Two crashed on a test flight in 2014 that killed the co-pilot and seriously injured the pilot. Branson has said he plans to be the first passenger on Spaceship Two's first commercial flight in mid-2019. Domino's Pizza Inc. NYSE DPZ reported its slowest U.S. same-store sales growth in at least 3 years in the second quarter, driving shares lower and raising doubts about its strategy for fighting off competition from delivery apps. Uber Eats, DoorDash, and Grubhub, Inc. have all pushed into the delivery business, which had been at the heart of Domino's expansion into the world's biggest pizza chain. The company has responded with a strategy it calls fortressing, which aims to speed up delivery times by opening more stores near existing ones. That, however, has come at a cost, a hit to sales at its existing outlets that last year knocked up to 1.5 percentage points off same-store numbers. In the second quarter of 2019, total U.S. same-store sales rose just 3%, below estimates and the slowest growth in at least 3 years. Comparable sales at company-owned U.S. outlets grew 2.1%, while those at U.S. franchise stores rose 3.1% in the quarter ending June 16th. Also, both below expectations, while those in international markets were up 2.4% in line with expectations. The company's shares were down 4.2% at $258.69 in the morning trade, having gained about 9% so far this year. Total revenue rose 4.1% to $811.6 million in the quarter, also below expectations of $836.6 million. Net income rose to $92.4 million, or $2.19 per share, from $77.4 million, or $1.78 per share a year earlier. Analysts had expected that the Ann Arbor, Michigan-based company to earn $2.02 per share. PeerStream Inc., OTCQB, PEER, a communications software innovator developing enhanced security and privacy solutions for video, voice, and text applications and data transmission, announced that it is joining with YouNow Inc. as a launch partner in the Props Developer Network. The company's popular social video apps, Paltalk and Camfrog, will be among the first apps to integrate this novel token-based user reward system. PeerStream intends to go live with the initial integration in the third quarter of 2019. Props is an open source project intended to tokenize the digital economy by connecting a network of apps and developing a platform to reward the people who grow those digital communities using blockchain technology and a token. The Props token is designed to enable a decentralized network of apps operating independently of one another to share an underlying currency that empowers end users who create, consume, and engage with content and services. PeerStream intends to integrate the Props token as a loyalty system for users of its popular social video apps, Paltalk and Camfrog, two of the largest live video social communities. Pending regulatory approvals, rights to receive Props tokens could be granted to users as a reward for video chat hosting, engagement, and other beneficial community building activities. Rewarded users can hold Props to get in-app benefits and take ownership in a token that has value on other participating apps. Chemesis International Inc., OTCQB, announces a partnership with US-based Happy Tea, a brand of CBD-infused sachets and shots. This partnership allows Happy Tea to expand its product offering and realize cost savings by leveraging Chemesis extraction, finished goods manufacturing, and retail distribution. Happy Tea currently offers 3 products, including powdered drink mixes and flavored oil shots that are comprised of a blend of all natural ingredients, antioxidants, and are infused with 10 milligrams of CBD. Consumers can purchase these products individually or subscribe to monthly deliveries, which are shipped via the company's e-commerce sales channels across the United States. Happy Tea will leverage Chemesis multi-state operations to increase production capabilities and create retail brick and mortar exposure through the company's distribution. Chemesis will assist Happy Tea in expanding its current 3 SKUs to an expanded product line of 9 SKUs. The company will manufacture Happy Tea products in its U.S.-based facilities and will increase production as demand rises. As per the partnership, Chemesis received a $4 million USD minimum purchase order to manufacture products. As demand rises and Happy Tea expands its product catalog, additional contracts will be added to ensure sufficient supply. Keynes Technology Company Limited, a publicly traded NASDAQ-listed company, stock code KYNS, is pleased to announce its joint venture with KN Bioscience Company of Taiwan in October 2019 for the establishment of a big data testing system. The joint venture will take place in mainland China, aiming at research, development, and manufacturing of testing equipment in combination with the big database for assisting concern service. A joint venture will be established with KN Bioscience Company, with the financing ability of KYNS to develop the service market in mainland China. KYNS plans to enter into an MOU with KNB via a share swap for the joint development of the market in Asia. Generex Biotechnology Corporation, OTCQB, GNBT, is pleased to announce the company has completed the acquisition agreement to acquire assets and operation of MediaSource Partners, an FDA-registered distributor of medical and surgical products. Under the terms of the deal, Generex will acquire 100% of the assets of MediaSource, including business operations, accounts receivable and inventory, contracts, and real estate, in an all-stock transaction effective August 1st, 2019, following the close of Generex fiscal year. As part of the deal, Travis H. Bird, CEO of MediaSource, will continue to lead the MediaSource operation and will join the Generex executive team focused on the sales, marketing, and distribution of surgical and biologic product lines. MediaSource Partners is a 10-year-old private company currently contracted with over 25 vendors for nationwide distribution of implants and devices for spine, hips, knees, feet, ankle, hand, and wrist surgeries. Additional product lines include biologics, blood, bone, tissue, and stem cells, durable medical equipment, and soft goods. The company also supplies kits to process bone marrow aspirates and platelet-rich plasma biologics at the time of surgery. Applied Energetics, Inc., OTCQB AERG, announced that the company has completed the acquisition of certain assets of Applied Optical Sciences, Inc., an innovator in developing technologies and intellectual property related to the application of optical physics in a broad range of areas, including photonics and advanced ultra-short pulse laser development. Founded by Dr. Stephen McCann in April 2010, AOS is a privately held corporation located in Tucson, Arizona. Dr. McCann is also an original co-founder of Applied Energetics and will serve as its chief scientist and full-time consultant to Applied Energetics. American Energy Partners, Inc., OTC Pink AEPT, a diversified energy company, announced it has completed the acquisition of a privately held Hickman Geological Consulting LLC, a Washington County, PA-based full-service valuation and geotechnical services company. Since 2013, HGC has been the Pittsburgh area's leading valuation house for oil and gas minerals connected with estate planning, expert witness, lease negotiations, and mineral sales. In 2016, HGC expanded these services nationwide. HGC also provides geotechnical services related to landslide identification, mitigation and design, as well as geotechnical residential building services such as ground stability and infiltration testing. The deal will be accretive to the third quarter earnings, and as a result of the acquisition, shareholders are expected to benefit from a number of outcomes, including enhanced competitive positioning and a platform from which to accelerate growth in energy services. The roadmap for value creation over the longer term has the potential to deliver substantial incremental value through the addition of new services that provide the opportunity to generate significant new growth opportunities aimed at reducing costs and enhancing revenues. Thank you for joining us on our weekly recap of market announcements and breaking news. Public Wire is committed to informing investors about company operations, earnings, and acquisitions. If you have an emerging IPO or a ground-level technology company, Public Wire would love to hear from you through our social media channels or directly through my contact information provided. I'm your host, Duke Hillinger. See you next time.